Hello, everyone. Good morning, and so excited to welcome you to another new month. Happy new month to everyone in the house. And before I kickstart, I would like to get a feedback that you can hear me and that the sound quality is quite okay. Please give me a feedback in that regard. I would really appreciate. So, welcome everybody once again to another promising live session. As usual, we are going to be taking a technical dissection of the current market structure with the utmost intent of identifying potential trading opportunity ahead of the new week. And for those who are joining us for the first time, you are highly welcome. And what we simply do here is to, at the beginning of the week, we normally have this series of financial instruments that we include into our watch list for the week. And every weekend, like that, prior to the beginning of the week, I normally share the contents of this analysis with you guys on my YouTube channel. And for those who are not yet aware of this, I've already shared the link to these videos right in the description box of this current video. So we are going to be treating four pairs as usual for this week, and the first one is the USOil, the GBPUSD, the USDJPY, and the which other one is that again? The XAUUSD, that is the gold metal. So these are the four pairs that we are going to be monitoring for this week. And in the video, I shared the link in the description box below. I went as far as giving you an holistic standpoint of what is really going on in the market and how we want to anticipate the new week, the new month, in such a way that we can position ourselves ahead of any potential trading opportunity for the week. So I went into details to analyze it from the daily time frame right into the 4 hours time frame, which will be the platform upon which we are going to be doing the analysis we are going to be doing today. So I want to be going into the higher time frame where we are talking during the live session. So that is why I implore that you watch that video so that you can have a background knowledge of how we got to this point, and at the same time you can use that information to make your own individual decision when you're about to make your own trade. So after the live session, you might want to watch them. The link is in the description box, and I've gone to make things a little bit more easier for you, so it is time stamped so you can easily navigate into whichever aspect of the video that is more of your interest. So with that being said here, let's dive right into the business for today. I'm yet to see any comment. Please, I would like to know if you can hear me clearly and you can see my screen. Just type in hi and give me a good positive feedback that we are good to go this morning. I'll really appreciate that, please. Thank you very much. So with that being said here, let's dive right into the business for today. So as usual, you know what we do here. The first thing we want to be doing is to keep tabs with the fundamental aspect, and in that regard we want to be looking at the economic calendar to see if there are any high impact events that will be affecting the instruments that we are going to be monitoring for this week. So we are going to be focusing on high impact event that will be affecting the US dollar, the pound sterling, and the Japanese yen. Basically, these are the currencies that we are going to be monitoring for this week. So we are looking at the economic calendar right now, and the first high impact event for the week is coming in on Monday, that is May 1st, that is today, and we have the ISM manufacturing PMI. This index shows us the business condition in the US manufacturing sector, and a result above 50 is always seen as a positive sign for the US dollar, and anything below 50 is always seen as a negative figure for the US dollar. And if you look at the previous data here, we have a 46.3, which is still not on the positive side, that is regarding the manufacturing sector in the US. And though we have a consensus projection of 46.6, which has a little bit of bullish tone in that regard, so we might be looking forward to something higher than the previous data here. So we are going to be looking forward to what the actual data is going to be. Is it going to be below expectation, or just as expected, or even go as far as going out beyond expectation on this one? So these are things that we are going to be looking forward to. But one thing I would like to state here is that these high impact events are not the decisive factor that tells us if we are either buying or selling any of the instrument that we are monitoring. What this helps us do is to help us time our entries, and at the same time it also gives us a clue into why we are seeing a certain type of structure on the chart. And one thing for sure I know is this: before the event is released, there are insiders who already know what the data is going to be, and we will definitely have been seeing the traces, there are trails in the market before the event finally comes in. So we have an idea of where price action will be going, so we can time ourselves in such a way that we can catch that potential move when it finally happens. So this is basically the reason why we check the economic calendar. So for today we only have the ISM manufacturing PMI, which is coming up in about 5 to 6 hours from now. So we shall be looking forward to that one, and obviously we shall be seeing the reflection of this anticipation on the charts as price action. So with that being said, here let's dive right into the business for today. And as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, if you have been following me on my Telegram platform and my TradingView platform, you would have seen the update I shared regarding the US oil commodity for today. So let's run through that quickly and see what we have here. So on the US oil, this is what I was able to bring up this morning. So I'm running through my public platform, that is the TradingView platform, to see the commentary we shared this morning. So this is what we saw at the beginning of the week. I said here that the new month started with a bearish gap. Obviously, we had the bearish gap, and which insinuates the perspective of trading activities during the course of the weekend. I have marked out structures on the chart, which shall be the parameter we will be using to guide the trading activities for today. So I was able to identify this whole structure here right between the $76.20 level and the $75.75 area. So we have like a 50-cent range going on during the first 8 hours of the new week, and I decided that I'm going to either buy or sell. If the breakout of the resistance level at the $76.20 level happens, we are going to be buying, and if price action breaks down the $75.75 level, we are going to be selling. And if you had received this information and you followed it accordingly, you should have a sell position triggered at this point, and the stop loss should be somewhere right around that resistance line at the $76.20 level to give us a 45 pip stop loss in that regard. So at this point, congrats to those who are taking advantage of this opportunity right now, as you will currently be running with about 35 pips in profit at this point. So my advice right now is to move your stop loss accordingly. Let's lock in some profit. Let's secure this position, as we never can tell. It's still the beginning of the week. Anything could still happen during the first half of the week. So we've not yet established a trend yet. So we are still testing waters at this point in time. So let's ensure that we secure this position, and let's see how price action will evolve as the week goes by. But before I conclude on the US oil here, I would also want us to take a quick look at the 4 hours time frame, so that we can just have an idea of why we are actually selling at this particular point in time. Now, if you look at the 4 hours time frame, which I actually shared on my in the video, I actually illustrated this in detail. So please watch that video, as it will give you an idea of what we are talking about here. So on the 4 hours time frame, the first thing I observed here is the fact that price action has been bullish since the month of March, and to that regard, we had this impulsive move that culminated at the $83.42 level, giving us an impulse leg in that regard. And since we saw the whole selling pressure resume around that $83 area, we begin to think that this might likely evolve into a retracement of that previous impulse leg. And in that regard, this whole setup here, this whole bearish momentum that we have been witnessing here in the last couple of weeks could be seen as a retracement of that previous impulse leg. And if you use your Fibonacci retracement tool and run it through the previous impulse leg, you know we normally aim at an area between the 50 and the 78.6%, which is our golden zone area for the culmination of that impulse of that retracement phase. Sorry. And what we noticed here during the trading session in the previous week was the fact that as soon as price action got into that area, just a little bit close to the $61.8 level, 61.8% retracement level area, we saw buy pressure resume around that area. So that area falls exactly at around the $74 level, which at one point in time has been a major determinant of price action in the past. Now, with this whole situation we had here, we saw the buy pressure resume. Excuse me, please. I'm having a flu and it's affecting my breathing, so please don't mind if there is any slurriness in my words. So we had this whole buy pressure resume around the $74 area during the course of last week's trading session to give us a sign that we might be having a demand zone. So as a result of that, I was able to identify this area as a demand zone. Now, what makes this whole structure very interesting is the fact that since the second week of the month of April, we saw our price action has been bearish. And in fact, to further emphasize the strength of the sellers in this market, we have a descending channel after connecting the series of lower highs and lower lows. We have this whole descending channel you can see on your screen. Now, during the course of last week's trading session, we saw our price action close just right around the resistance line of that descending channel. And that area also shares a confluence with the $77 level, which has been a very strong determinant of price action in the past. If you go to as far back as 2-3 weeks ago, we saw how that $77 area was a very strong demand zone, as you can see here, before we saw the breakdown of that structure during the course of the previous week. Now, from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that from a technical standpoint, that price action is likely going to come back, retest that structure, and look at how important that confluence is. The resistance line and the $77 area shares a beautiful confluence, and at the same time, it also lines up with the expectation that price action might be going in the direction of the proud leading price action, which is bearish at this point. And if we look at what happened during the course of the weekend, we can see that we had some selling activities happened during the course of the weekend, which gave us this bearish gap that you can see at the beginning of the week. It's a sign that sellers are still very, very strong in this market. And in the video, I told us all, the video I shared during the course of the weekend, that we might likely see either a breakout of that resistance line and the $77 area to incite a bullish move to the upside, or we could see selling pressure below the $77 area to incite a trend continuation to the downside. Now, this whole bearish move that has started this week, we don't know how far it's going to go. So at the meantime, we could have our TP target somewhere around the $74 area, which will be dovetailing to about 200 pips for us at this point in time. And it now depends on how price action reacts to that $74 area that will determine if we are going to be adding more sell position. So if it so happens that price action breaks down the $74 level, then we might be in to add more sell position to our existing trade. But if price action gets into that structure and instead of breaking down the structure, we begin to see another wave of buying pressure come in, then there is a high chance that we could, during the course of the week, witness a breakout of the resistance line of that descending channel to give us a buying opportunity for this week. So we are going to be monitoring this closely. So if you are with me on my TradingView platform and my Telegram platform, I will be giving you an update. I'll be dishing out updates as at when due, so that we can actually have an idea of where we want to be positioning ourselves for. So at this point in time, we are bearish. We have a sell position running right now, and we are hoping to see how far this bearish momentum is going to go. And in the meantime, we have a TP target around the $74 area, hoping that price action will get into that structure. So let's see how this plays out. And for those who had missed out on this opportunity, well, I will be advising you to remain very patient here, as you don't want to be jumping into in front of a moving train. So we'll want to see price action give us another opportunity to be part of that move. That is, if you had missed out on this one, we might likely see price do a retracement at one point. You all know from a technical standpoint that when price action breaks down a key structure like this, we expect that we might see a retracement at one point to inside the trend continuation. So we can be looking forward to that one. Or we could have a situation where this impulsive move that we have here, which is not yet confirmed actually, it could still be a false breakdown, and we could see a trend continuation pattern probably on our 15 minutes time frame around this area, or the 5 minutes time frame. Then we could take advantage of the breakdown retest of that structure. But be rest assured that I will be with you in the comment section on both my TradingView platform and my Telegram platform to give you an update on what I think is going to be happening around that area. So let's keep this in mind. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the US oil spot for today. If you do have any questions, let me know right in the comment section, and let's see how I can be of help in that regard. Leon B, how are you doing this morning? Good morning to you, Leon. I hope you had a wonderful weekend, and happy new month to you. And thank you for the feedback, positive feedback. I really appreciate that. Thank you very much, Leon. All right, so with that being said, and in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next pair, which is going to be the GBPUSD. So on the GBPUSD, this is what I was able to spot during the early hours of today, as I was able to cite this whole situation where price was trapped within the 1.257 and the 1.25420. So for the sake of clarity, let's quickly look into my update on the TradingView platform. So this is the GBPUSD. So I shared a commentary this morning. Hold on a second, let's run through it quickly. Okay, so this is what I shared here this morning after monitoring how participants in this market is reacting to the current market structure. Remember, we had a very strong bullish momentum during the end of the previous week. That was on Friday. We saw this engulfing candle which broke out of that 1.2500 level for the first time in about a month or so. I think 6-7 weeks. That was the first time price action will break out of that structure. And you know, from a technical standpoint, when price action breaks out of a structure, we expect that it will at one point in time come back to do a retest of that structure in anticipation of a trend continuation to the upside. And with the look of things right here, the GBPUSD has started the month on a bearish note. So I made this commentary here this morning. I said the new month has started on a bearish note, and this could be the beginning of a retracement of the bullish impulse leg. At the same time, we cannot ignore the possibility of this current structure transitioning into a trend continuation pattern. So what that simply means is that price action could still break out of that resistance line at the 1.257 to incite a trend continuation. So let's go back into the live chart here. So I stated here that we are going to be having a sell stop order below the 1.25420 and a buy stop order at the 1.25700 area. And if you had followed that instruction, you will currently be running with about 18-20 pips in profit right now. So it has been a a little profitable start to the week. We cannot confirm that it is going to be profitable at this point, as we are still just starting the week. So I hope your stop loss is situated, is located anywhere around the resistant or above the resistant line, which will dovetail to about 25 to 30 pips thereabouts on the structure. Then TP target should be along the trend line at this point. Let's scale up a little bit into the 4 hours time frame so that we can see what is happening here. So if we are going to be having our TP target somewhere around the trend line, should be most appropriate for our TP target. And let's look at this whole structure from an holistic point of view. Now, on the 4 hours time frame, if you had watched my video during the course of the weekend, I explained this in detail, where we spotted the fact that price action has been bullish since the mid-month of March. And to emphasize the strength of the buyers in this market, we connected a series of higher lows here to give us that bullish trend line you can see on your screen right now. Now, what happened on Friday last week was a very phenomenal event. As you can see, we have the key level at the 1.2500 area. And if you had noticed, you will see how this level had been a very, very strong selling niche in this market since the beginning of the month of April. As you can see, at every point in time, buyers try to break out of the structure. We have been seeing the presence of sellers negating all this attempt. The same thing also happened here mid-month of April, though we had a breakout, but that move did not last long before we saw selling pressure bring price below that level. And throughout the course of last week's trading session, the same thing also happened here, as we saw continued selling pressure negating the bullish attempt. And one interesting thing about this whole structure is that despite the fact that sellers were negating the bullish momentum here, you will notice that there was no lower low in this market, as price action had continued to find higher lows. And this is a beautiful sign that buyers are gradually gaining some momentum. And every point in time they knock the ceiling, at one point it's going to be very massive, that ceiling will get weakened and a breakout will happen. And this is exactly what happened on Friday. We saw this beautiful engulfing bullish candle breaking out of the 1.25 level, and at the same time breaking out of this lower highs, this trend line here, to give us a bullish signal. Now the question for the week is, will this bullish signal be a valid one, or is it going to turn out to be a false breakout? Well, we are going to be answering this along the line during the course of the week. Probably when we enter into the midweek, we get to have an idea if this is going to be a false breakout or a true one. But at this point in time, what we are going to be focusing on is the fact that we have a breakout of the structure. And you all know from a technical standpoint, whenever price action breaks out of a key structure like this, we expect that one point in time price is likely going to come back and do a retest of that structure, where the appearance of buy pressure around this area will incite the second wave of the bullish momentum that broke out of that structure. And as you can see here, we saw how the week has started on a bearish note, which I think at this point is a sign that we are going through a retracement of that impulsive move. At this point in time, we have no other choice than to remain patient to see how far will this retracement first go. Is it going to go to as far as the 1.2500 level, which also shares a confluence with the trend line in anticipation of another wave of bullish momentum, or is it going to break down that structure into the trend line here, which happens to be supporting the bullish momentum in the last 1 month, to incite the trend continuation to the upside? So these are things that we are going to be looking at. So that is why I have stated here that our TP target for the sell position we are in right now should be around that area, which will be dovetailing to about 110 pips. So with that being said here, there is a caveat to this whole structure here. Now, as we are in a sell position right now, one thing I want us to take note of here is the 1.2500 area. So as soon as price gets into the structure, we want to ensure that all our sell positions in this trade are well secured. What I simply mean by that is, as soon as price tests the 1.250 level, we want to move all our stop losses to secure the current sell position. And it now depends on how price action reacts to the 1.2500 area that will determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy. So if we get into the 1.25 here and price action begins to find something like buy pressure above the structure, like a double bottom structure, then at this point we will see this as the culmination of that retracement phase, and we shall be getting ready for another wave of bullish momentum. But if it so happens that price action breaks down the 1.2500 area, and we saw that buyers were finding it difficult to climb back above the 1.25, where we start seeing certain pressure on our lower time frame, then at this point we want to be adding more sell position with the hopes that price action will still continue into the trend line where it will hit our TP target. And if it gets into the trend line, a breakdown definitely will incite a sell-off in this market. And if buy pressure resumes above the structure, then we are going to be joining the second wave of the bullish momentum. So this is what we are going to be looking at on a long-term perspective. But at this point in time, let's focus on the current market structure. And our next aim is the 1.24250 level, where we want to see how price action will react to that structure to determine if we are going to be buying or added more position to our sell trade. So at this point in time, congrats to everyone who has been part of the sell position, and let's see how far this bearish move is going to go at this point. So right now we are running with about how many pips in profit right now? About 22 pips in profit right now. So I will be advising us to move our stop loss to secure this current sell position, and let's see how far this is going to go. And for those who had missed out on this opportunity, well, there's no cause for alarm. Be patient. And we don't want to jump into a moving trend right now, as we need to wait for the market to give us another trading opportunity before we want to be joined. Be rest assured I will be with you in the comment section on both my TradingView and Telegram platform to give you an update on what our next line of action will be. So we might still see price action do a retracement back into structure at one point in time during the course of the week to insider trend continuation. And if the contrary happens and price action breaks out of the 1.257, then we would have no choice than to look out for buying opportunity to join the trend continuation. So at this point in time, it's not yet concrete at this point. So let's secure this current position. Let's wait out and see how price action will react in the next couple of hours. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will ensure to check them up and in due time so that I can answer them appropriately. Leon B, I'm glad you are happy. You're welcome. All right, so in the absence of no questions, I will be moving on to the next commodity, which is the XAUUSD. And on the XAUUSD, this is what I was able to spot here during the early hours of today after monitoring our participants in this market will react to the $1,990 level. And in fact, I should have sold at that point after identifying that sell pressure, but it was during the midnight that happened, so I was fast asleep. I missed that opportunity, and I'm still waiting for another opportunity to evolve in this market. But for those who are taking advantage of that move at the 1,990, well done to you guys for being on standby. And what you want to be doing right now is to move your stop loss to secure this current position as we continue to monitor price action. But at this point in time, personally, I missed that sell position there. So this morning I shared a simple commentary here on my TradingView platform. Let's go through it quickly before we go back into the live chat for the next line of action for today. So on my TradingView platform, this was what I was able to spot, and I said here that the new month has started on a bearish note, and it is clearly illustrated on the chart the activities of market participants in the first few hours of the week. So we are waiting for a signal in the form of either a breakout or breakdown of the current structure. However, because of the demand zone, it is important to note that the breakdown of the support line will not trigger a sell position, as we need a confirmation of selling pressure before joining that move. So what I simply mean here is this. Now let's run through the 4 hours time frame so that we can have a better perspective of what is going on in this market. So look at the 4 hours time frame here, and what I did on the 4 hours time frame was to take into consideration what has been happening in this market since the second week of the month of April actually. And one thing you will notice at first sight is that price action is bearish in this market. And to emphasize the strength of the sellers, you will see that I connected a series of lower highs here, which has given us this resultant bearish trend line as price action had consistently respected that trend line. However, something interesting has been happening here in the last couple of weeks in this market. Despite the fact that price action is looking bearish, we can see that there is no lower lows in this market. So as soon as price gets into that 1,970 area, we saw our buyers had been negating all selling attempts in this market. See what happened here? Even during the course of last week's trading session, we saw how that area had been negating all sellers attempts in this market, hereby giving us a very strong demand zone to work with as we head into this new month. So at this point in time, I shared this during the course of the weekend where I told us that we are at a very critical confluence right now where the $1,990 level is going to be our key level for the week. And you all know what I do whenever we have a key level. It serves as a guide, as if price action trades above the key level and buy pressure resumes above the key level, we want to be looking out for buying opportunity. But if price action stays below the key level, continued selling pressure on our lower time frame, then we want to be looking out for selling opportunity. But in this case scenario that we have here, you would agree with me that we are sitting right on a very big demand zone at this point. And it is very, very important that we remain very patient here before joining any sell momentum here, unless price action gives us a very significant signal that sellers are getting stronger at this point. Personally, if we are going to be looking at this from a long-term perspective, I would rather see price action take out the demand zone at the 1,970 to give me a signal to sell. And if selling pressure continues below the structure, then we will begin to add more position to our existing trade. But there is one thing about this whole kind of situation here, is that is there a possibility that we can join the sell momentum even before the breakdown of that demand zone happen, hereby maximizing the full potential of that move even before the breakdown happen. And when the breakdown happens, then we could be adding more position to our existing trade. So this is what I was looking at the beginning of the week, and as a result of this is what I was able to spot on the 1 hour time frame. So let's scale back down into the 1 hour time frame, and this is what I was able to identify, and this was what I was explaining in my commentary on the TradingView and Telegram platform. So we had this whole situation here where price action started the week on a bearish note, just respecting the bearish trend line one more time, trading below the key level, also signaling that price action sellers are still strong in this market. And like I said, I missed this opportunity. If I was awake, I would have sold at this point. And for those who had sold, well done and kudos to you for being on standby to have caught that move. Ensure you move your stop loss to secure the current position at this point. So what I was saying on my public platform here is that we are not going to be having a sell stop order below the 1,980. Although we have a breakdown of structure already, we're not going to be selling right away as we need confirmations before we want to be joining. And like I said, we are sitting on a very strong demand zone, a level which has been negating selling pressure in the past. So we want to see significant signals around that area that will proclaim and give us a clue that sellers are getting stronger. So what do we want to be seeing at this juncture in the market before we want to be joining a sell move? So we want to see price action break down the structure. Then I want to see a retest of the structure. It could climb back above the 1,980, but as long as the breakdown of the 1,980 happens, and then we see a retracement back into structure, selling pressure resumes on our lower time frame, then at that point I can have a sell stop order below the 1,980 to join that decline to the downside. And if a further breakdown of the 1,970 happens, then you all know definitely we want to be having a sell stop to be part of that bearish move to the downside. So this is how we are going to be selling the XAUUSD today. So I wish that we'd be on standby so that we can catch that opportunity. Now, in as much as we are looking out for selling opportunities at this point, we should also take into consideration the potentials of the buyers in this market. And considering the fact that we are on a very strong demand zone just right above the 1970, 1975 zone area, we might likely be seeing a bullish momentum at any point in time. So if that is going to be the case, what do we want to see on this chart that will give us the confidence and the privilege of being part of a bullish move? Personally, what I want to see here is price action breaking out of that trend line. Remember, the trend line has been guiding this bearish momentum since the beginning of last month to further emphasize how strong the trend line is. So for me to buy at this point, I want to see price action break out of that trend line. And in fact, if price action breaks out of that trend line, it would have broken above that key level for this week, which is sitting at the 1990 level. So if a breakout of that structure happens, I want to have a buy stop order above that level so that I can join that trend continuation, that move to the upside. And if we are lucky enough, price action comes back, do a retest on our lower time frame, then we could be thinking of adding more position to our existing trade. But one thing about this whole market structure is that a lot of fundamental factor is going to be affecting the gold for this week actually. And remember, we have a week which is laced with a handful of high impact macroeconomic event, and one of the most important one is the FOMC, which is coming up in 2 days time. And there is a general consensus that the Federal Reserve is going to be raising doing an interest rate hike of 25 basis points, which is going to be affecting the dollar in one way, as this will increase the saving power of the dollar. People want to save more in the dollar, want to invest more in the dollar, and this would likely incite another demand for the dollar in the market, which might give us a bearish momentum for this week. So it's looking very bearish for this week actually, but we'll still need to listen to the market structure to give us an insight into what is happening. So at this point in time, this is what we are going to be looking forward to here. Selling opportunities below the 1980 if price action does a retest, or selling pressure below that structure on our lower time frame. And if a breakout of the 1990 happens, we are looking for buying opportunity at this point. But I will be with you as usual in the comment section of my TradingView platform and my Telegram platform to give you updates as at when due. And for those who are not on my public platform, you can see the details of my public platform scrolling at the bottom of your screen, so you can join any of those platforms to be part of my daily commentaries. So let's move into the last pair for today, which is the USDJPY. So the USDJPY happens to be one of our most profitable trade last week, after we took advantage of a buy position just right above the neckline of the potential reversal pattern we identified on the daily time frame. For the sake of clarity here, and for the sake of those who are not part of our live session last week, let me run through what we saw on the USDJPY's daily time frame that made us to look out for buying opportunity on this pair. So this is the daily time frame here, and this is what we saw initially at the beginning of the week. First of all, we acknowledge the fact that the 131.00 level has been a very strong demand zone in the last 1 year. As you can see, how this area has been negating all sellers' attempts in this market. Now, we saw something happen here in the month of February, where price action broke out of that trend line and respected a technical expectation, where a breakout of structure, we expect price to retest the trend line, which also shares a confluence with the 131.00 area. We saw buy pressure resume at this point. Price action transition into a reversal pattern, which looked more like a double bottom structure. So this is what we identified prior to 2 weeks ago, and we spotted the neckline of that reversal pattern to sit at the 133.800 level. So 2 weeks ago, we were expecting a breakout of that neckline, which we actually took advantage of. 130 pips move thereabout before price action drop back into the neckline. And on Thursday, Friday last week, we were looking out for buying opportunity above the 133.800. And remember, I told us all that we should have a buy stop order above the 133.800 to be part of that move. And thank goodness and luckily enough for us, we were part of this move, as we saw our price action had moved over 200 pips in one single move. And we were able to scoop about 500 pips minimum, as we had multiple entries on that position. So it was quite a profitable week for us on the USDJPY, and some of us will still be in this position right now, as we had people who had positioned over the course of the weekend, holding that position over the weekend. But I'm sure you've moved your stop loss to secure your position, as you don't want to get caught up in any sudden pullback that might likely happen at this point. And remember, we have a resistant level at the 137 area, which has been a strong selling niche in the past, and right now price action is gradually approaching that level. So we need to be very, very cautious here. Move your stop loss, secure the current buy position if you're still in a buy position over the weekend. So with that being said, here I want us to go back into the 1 hour time frame, and this was what I was able to spot here on the 1 hour time frame. So I looked at what has been happening since the beginning of the week. Actually, price action has been bullish since the beginning of this week, and I missed that actually, and I was fast asleep at that point. It's the midnight when this whole situation happened for me here, and for some of us, we would have taken advantage of that move. Kudos to you if you had done that. But at this point in time, I shared this update on my public platform, where I was able to spot this whole situation between the 137.00 area and the 136.200 level. So we have a, how many pips channel is that? A 80 pips channel at this particular point in time. And at this point, I'm going to be suggesting that we remain very patient here, as anything could actually happen. And since we have an impulsive move on Friday, you would agree with me that majority, especially key players in the market, who had bought the USD at a very cheap price around the 134.00 area, will at one point want to be doing some profit taking activities. So they want to be taking some profit off their positions, hereby closing those positions. And this whole activity, and because of the voluminous transactions they have, will reflect on the chart as a retracement of that impulsive move. So we need to be very, very careful at this juncture, as we need to understand how participants in this market will be reacting to this area before making any informed decision. So at this point in time, I already have a setup mapped out on this chart, and let's talk about the expectation of buying potential in this market. So for me to buy the USDJPY for this week, considering the long-term bullish momentum here, I'm going to be having a buy stop order above the 136.700 level here to join the trend continuation to the upside. So if a breakout of that structure happen, I want to have a buy position triggered. Probably we could have the trend continuation of the impulsive move that started last week. And if possible, price action comes back to retest structure, then this will also give us an opportunity to add more position to our existing trade. So this is how we are going to be buying from this current market structure that we have on the chart right now. Then the other scenario that could possibly happen here is if price action turns out to go to start a retracement of the impulsive move that started last week, then we might be seeing price action will break down this support line at the 136.200 area to incite a bearish move to the downside. So at this point, I will be having a sell stop order below the structure so that I can catch that move if ever price action breaks down that support line at the 136.200. So that is how I will be trading this. Then we will look forward to see our TP target along the trend line here. If you had watched my video on the USDJPY, I talked about this on the 4 hours time frame. So we have a trend line here, so we could have a TP target around the trend line. And one thing for sure is that as soon as price gets into the 135.00 level, we want to be moving our stop loss to secure the sell position and see how price action will react to the 135.00 level to decide if we are going to be adding more sell position to our existing trade or getting ready to buy. Don't get things twisted. I'm going to be with you in the comment section on both my public platform to give you updates on how we are going to be taking advantage of any move when price action gets to that level. So right now, what we are focusing on right now is the structure here between the 136.700 and the 136.200 area. So a breakout of that structure will welcome buying opportunities, and a breakdown of this level will welcome selling opportunities. Then there's one thing I just saw here on this chart while doing this analysis, is the fact that if we consider the higher lows in this market, we could identify a bullish trend line, which I will call a temporary one at this point, as we still need some level of confirmation in the form of the breakout of the 137 to affirm the strength of the buyers at this point. So I will call this a temporary bullish trend line right now. So after connecting the series of higher lows, I have that trend line there. So if this trend line will continue to guide our bullish momentum, at least for the first half of the week, and if at any point in time a breakdown of this trend line happens, then I will be considering selling, where a breakdown of the structure will welcome more selling opportunities. So when a breakdown of the trend line happens, I will be giving you an update on how to take advantage of that move. So at this point in time, just have your sell stop order below the 136.200 and a buy stop order above the 137.00 area for trading opportunities for today. And it's on this note I want to call it a day here. It has been a wonderful moment, and I'm very sure and confident that you are well equipped to be able to take advantage of any potential trading opportunity during both the London and the New York session today. And we were able to simulate all the possible scenarios that could likely happen during the market section today. So let's be on standby to be able to catch whichever opportunity that the market presents to us. And for those who are already in a sell position or buy position, whichever case it may be, ensure you have moved your stop loss accordingly to lock in your current position. Remember, we have an high impact event coming up in about 4 to 5 hours from now, and there is a high chance that we could be having a level of volatility in the market coming prior to that event. So let's be on standby for that one, and I hope to see you right in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.